If we take a step back and look at how the stock market has grown, back in 2007, the stock market peaked at just below 14,000 points. And when I talk about the stock market, I'm talking about the Dow Jones. So in 2007, the Dow Jones peaked at right around 14,000 points, and then in 2008, as we all know, the stock market crashed. In 2008 and 2009, the stock market bottomed out at right around 7,500 points. So almost a 50% drop. After 2009, that's when we saw the stock market start to recover, and it recovered until about 2012 and into early 2013. In late 2012 and early 2013, that's when the stock market went back to around 14,000 points, hitting its early 2007 high. Now, from 2013 until 2019, the stock market just kept going up from 14,000 points to much higher because the economy kept growing and the stock market naturally kept going with it. Then in 2019, things became very interesting because in 2019, the economy started to slow down and the stock market was kind of getting a little worried because people were saying that if the economy is slowing down, then the stock market's going to come down. So that's when people started talking about a potential stock market crash. But that's when in 2019, interest rates were cut. So typically, interest rates are only cut when you're in a recession because lower interest rates stimulate the economy because now it's cheaper for people to go out and borrow money. And when it's cheaper for people to go out and borrow money, you're more likely to buy a home, you're more likely to spend money, and businesses can borrow money for cheaper and then they can invest this money into their business. So interest rates were cut in 2019, not during a recession though, but in a very growing economy. If you remember, back in 2019, there was tons of headlines talking about how the United States is in the strongest economy ever. And in the strongest economy ever, we were cutting interest rates, which is something you typically do when you're in a recession. So the reason we were cutting interest rates is because the economy was slowing down, people were getting worried about what was going to happen, and that kind of kept the stock market going up even more. This brings us to 2020, which I'm going to put on its own line because 2020 was a crazy year and I think it definitely needs its own diagram. So in January, February of 2020, we were breaking new highs in the stock market, and in February of 2020, the stock market hit right around 29,000 points for the first time in history. But then, as we all know, in February, that's when the pandemic came and it shut everything down. And then in March, people panicked. Everybody was like, what is going on? Because we have never experienced, or at least I have never experienced, an economic shutdown like this before. And everybody on Wall Street did not know what to expect. And so people were panicking, they were selling their stocks, and we saw the fastest stock market sell-off in history, and we saw the fastest bear market in history. So we went from 29,000 points in February to right around 19,000 points in March, just 1 month later. Then in April, May, this is when things started to turn around because people started to kind of understand this virus a little bit more. People started to understand this pandemic a little bit more, and the economy started to open up a little bit. So that's when money started to flow back into the market. And so now we saw the stock market start to go up. So in May, June, July, August, September, October, we kept seeing the stock market go up. I mean, there were some months in the middle where the stock market came down, but in general, the stock market kept going up from 19,000 points higher. Then going into November and December, so this is towards the end of 2020. I'm going to talk about 2021 in just a second. So we'll talk about end 2020. What we saw happen is the stock market reached new highs. So in December, we saw the stock market break 29,000 and hit 30,000 points for the first time in history in December of 2020. So February, we broke a new high. March, we saw the fastest stock market sell-off in history. Then in March to December of 2020, we saw one of the fastest stock market rallies in history where we broke a new high. Some of the things that contributed to that were low interest rates. Remember how we talked about how interest rates were cut in 2019? Well, in March, interest rates were also cut again. We saw interest rates go to the lowest levels ever. That's why you hear people talking about these low mortgage rates, because we have never seen interest rates this low. So we saw interest rates get slashed to insanely low levels in March. And we also saw a lot of stimulus happen. So we saw people getting stimulus checks. We saw businesses getting bailed out. And we also saw a bailout in the stock market because for the first time in history, the Federal Reserve Bank started buying corporate bond ETFs. The Federal Reserve Bank kept pumping money into the market. And so we have seen an insane amount of stimulus, not just for people, not just for businesses, but also the stock market. And so this kind of pushed the stock market up to brand new highs, which is why towards the end of 2020, we saw the stock market break 30,000 points. And now the question is, what is next in 2021? The first thing we can look at is the money supply, or cash that's going into the stock market, because on a very basic level, at the end of the day, the stock market and stock prices are determined by supply and demand. If you have a ton of people that own stocks, but nobody that wants to buy a stock, if these people try to sell the stock, well, nobody's going to be buying it. And so now the people who are selling stocks are going to have to cut their prices, and that's going to push stock prices lower because nobody wants to buy a stock. That's what happened in March, because everybody was worried about our economy. Everybody thought the economy was going to collapse, so nobody was buying stocks, and so the stock market collapsed. So if you have no buyers and a lot of people who are selling, this makes stock prices go down. But if you have a ton of people that want to buy stocks and not a lot of people that are selling, this pushes stock prices higher. So you have to look at the kind of money supply that's going into the market and how much money is going out of the market to really kind of understand what's going on. Well, in this early time, March, April, May, June, what we saw happen was during this time, we saw a ton of money sitting on the sidelines. So during this time, we had a ton of money leave the stock market, and we saw some of the biggest piles of cash held by investors in cash, not in the stock market. So if your money is in cash, not in the stock market, that means you have less money going into the stock market. During this time, we saw a lot of retail traders, so people who are trading off of Robinhood and Webull and apps like that. We saw a lot of retail traders go into the market, but we saw a lot of bigger investors who have a lot of cash pulling their money out. And so during this time, people were scared and there was not a lot of money in the market. But towards the end of 2020, we saw the complete opposite happen. We saw now, towards the end of 2020, a record influx of cash into the market, and now we actually have less money sitting on the sidelines in the end of 21 than we did before this whole pandemic started. So during this March, April, May time, we saw a record amount of cash leave the stock market and sit on the sidelines. Now, towards the end of 2020, October, November, December, we saw a record amount of cash enter the market, where now there's less cash sitting on the sidelines towards the end of 2020 than there was before this whole pandemic even started. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.